Welcome back, guys, to another episode of 5-Minute DD, the source where you get all the information you need to know about these high-yielding dividend stocks. So ORCC is the stock for today, Owl Rock Capital Corp. I do own this stock, just so you guys know. I do like it, but I'm going to give an unbiased review. There's a lot that could be wrong with this stock, and I want you guys to get the full picture before you do your own research. As always do your own research, your own DD on these stocks. This is just to get your foot in the door. For those that are new to the channel, guys, if you could like the video, that helps me out a bunch. Drop a comment if you want me to do a 5-minute DD video on a stock of your choice, and subscribe if you're interested in this type of stock content. I love making these videos, and I've been learning a lot more in the past couple of years about stocks. So let's jump into the pros about Owl Rock. It is a nice 10% dividend yielding stock. Part of that is because the price has been a little bit beaten down. A lot of 10% yielding stocks are on the market right now because of how the bear market has been pushing everything down. So it is a bonus that it's at a 10% dividend yield right now, and you could scoop up some shares and keep recouping that yield, but still a little bit rocky territory with the overall market. Now, they are a direct affiliate of Blue Owl. I had to look all of this up. It's very interesting. Blue Owl is a huge company, and they own a number or have a number of these affiliate companies that are actively managed by Owl Rock. So it is an affiliate, but it's not managed by Blue Owl. Blue Owl is a very large firm, relatively trusted from the research that I conducted, have a good track record. So it's a benefit, in my opinion, to ORCC to be affiliated with Blue Owl. Definitely a positive thing. Now, talking about this, it is a BDC, a business development company. For those that don't know what those are, they're kind of companies that invest in smaller to mid-sized companies that need just financing help. You know, maybe they have a good product or a good idea, but they don't have the money to do it. ORCC, BDCs invest in those companies and then recoup a lot of money on their initial investment. So it's a relatively risky practice, but as long as your development team is really good, you can see some great profits, and we'll be able to tell if this company has a good development team based on some of the information from their investor relations stuff. So one of the main things that immediately tells me that this is a better management team is that they have senior secured loans and first lien debt, meaning that if something goes wrong with the debt, they are the first ones to be paid out. That is extremely important, and they do talk about their second lien debt, which we will talk about. Now, their dividend history, let's talk about this. So they haven't been paying dividends long. If we look on their chart, their max chart goes all the way back to 2019, which when it went public. Kind of an ugly max chart, but they haven't been around that long, so it's not necessarily terrible, only down 15% all time. Now, going back to their first dividend, 44 cents, phenomenal. A special dividend right off the bat, and then paying 31 cents since then, with a really interesting, you can see the pattern with their dividend, and now they've kicked it up to 31 cents every single quarter. Now, these double months, you can see these are considered special dividends, which is why you have 31 cents and then 8 cents, 31 cents and then 8 cents. Now, their last special dividend was in 2022, and it was a 3-cent gain, which was very impressive. I really do like that. And now they're jumping up their typical dividend with, it's now 33 cents without the special dividend alone. So the dividend history is good, albeit very short. So there could be a lot of things that go wrong with this company. I like that they haven't been cutting the dividend and that the dividend's been consistently doing a little bit better, but not a lot of dividend growth so far, just this last year. So something to think about. And this has their dividend yield at about 11.4%. That's probably higher than the Google 10%, simply because they are more accurate on here because they have the more recent dividends. So the rate changes. Everyone knows that the rates have been kind of killing the market. The Fed's been killing the market a lot. And money's been tight for a lot of people. Now, that can be a benefit to BDCs if they're using what's called, so there's two types of loans. You can have fixed rate or variable rate loans. And so when it's a variable rate loan, the companies make more money over time when the Fed raises rates because it costs more money to borrow money. So ORCC will be making more on those variable type rates because, like I said, the rate goes up, they're going to be charging more money for the borrowed money, and when it goes down, they charge less. So that actually plays a role. If we jump into their investor relations portion of their website, you can see on the right side here, rising interest rates. So they're calculating everything based off how many basis points the Fed raises rates. So they'll make more money depending on how many rates they raise it. So we can see that in Q3 of 2022, the average was 2.30 on the debt investments, which is extremely low, and it won't be that continuing. So it's already jumped up quite a bit, meaning that it will be making them more money. Now, it's a little bit more dangerous with that too, because people can default on their loans. Companies can default on their loans at a higher rate. So it's kind of a negative and a positive. Special dividends, I love special dividends. We can see that they have a history of special dividends, and they talk about continuing that, and they basically pay them out on the regular, which is definitely a bonus. I've already been paid a couple special dividends, and I really like it because it's just like extra money, and it's not money that I was counting on, I should say. Keys to the strong performance. This is from their investor portion of their website. It's one of my favorites. Staying power of upper middle market businesses with stable recession resistant business models, meaning that they are not investing in all these crazy small penny stocks. They are a safer but still higher risk category with these kind of middle of the market type businesses. First lien focus, extremely important, especially in times when when rates are going up, because you want to be the first ones paid out in the worst case scenario when things go wrong. They have a lot of diversification, and just this is a lot of information. I'm not going to read all of it, but you guys can go check it out in the investor portion of their website. I'll link it down below in the description. Go ahead and like the video if you're down there looking for that, by the way. Now let's talk about the cons. Low dividend growth. They've only increased their dividend once, and it was in the last year. So, and I mean, over a 4-year period, 3-year period, it's not that terrible to not increase your dividend, but still, they're in a building point, so I understand why they wouldn't, but I still like some dividend growth, so I'm not really counting on this one for dividend growth, and that's what puts that in the con section. And then the newer fund, a newer IPO, is just a little bit scary. You don't have a lot of the dividend history to go off, you don't have a lot of the price appreciation to go off, you don't have a lot of experience with the team working in this fund specifically. You know, they may have people, fund managers from different teams that have been working for 10, 20, 30 years, but they don't have the time in with this company yet that can make it a bit riskier. So that's kind of me wrapping up the video, guys. I hope you guys enjoyed this content. Please like the video if you did. Drop a comment if you have any criticisms about anything. I love listening. It helps me learn if you guys point out something that I said incorrectly or did something wrong. And then if you would subscribe if you like this content, it helps me out a ton. Lastly, this is not financial advice. As always, do your own DD. I love showing people how to do their research, how you can find all this stuff for free online when you make a decision on if you want to buy a stock or not. That is totally up to you guys, but I hope this was helpful. Hope you guys have a good day in the market and have a good rest of your day.